All right, guys. Welcome to this webinar. This we will go over Forex 101. We're going to go over Forex 101, like what's Forex and life, like how I relate life to Forex, what principles like you can use, which you use in life, and you can use the same principles in Forex as well. Then we'll go over trading plan, how you should have your trading plan structured, what are the things you should really focus on when you make your trading plan, and how important it is to actually follow your trading plan. After that, we're going to go over time frames, your daily time frames, 4 hour, 1 hour, 30 minute, 15 minute, and maybe 5 minute. In this, we're just going to go over how like important your time frames are, like when you're trading, or when you're like looking for like trend directions, or whether you're just looking for like rejection and stuff like this. Then we're going to go over support resistance. Support resistance is, I think it's like the most crucial part of trading and being profitable. I mean, for me, myself, and like for some other people I know, support resistance has been very, very profitable. I mean, because what happens is with support resistance, you're basically looking for price to bounce, right? So you're just trying to have calculated probabilities on when the price is going to bounce. So that's support resistance. Then we're going to go over news trading, how you should trade the news, what you should look at when you're trying to trade the news. And then in the end, we're going to have some questions. All right, so let's start this here. Okay, Forex and life. Now, the way I look at it is like, like how you live life, right? You have rules, you have different concepts, you have different approaches to different things in life. You can use the same things in Forex. Like, I mean, when you're trading, right? When you're trading, you have a goal. You have a goal and you tell yourself, okay, like my goal is to trade, like, let's say USDJPY. So you're trading USDJPY, and either it's going to go up or it's going to go down, and you're going to make a decision. In the same way in life, you make decisions, right? Either it's going to be a yes or it's going to be a no decision. So you can use that same concept in Forex, because most times, like, what I see people do is they will take a sell, and then right after that they will close sells, they'll take buys, and then they'll close buys, and then they'll take sells again, which is very, like, that's not productive at all. Like, if you go through life with haphazard decisions, you're not going to go far, like, anyway, right? So, and another thing is, like, you do, like, most people, they do live life with a very, very strong discipline. What I mean by that is, like, you know how there are, like, some people who, what they do is, they refuse to, like, conform into one thing, which means they refuse to follow rules. They refuse to, like, they're not really followers, right? They're like leaders, like they are innovators, right? So Forex is like the same thing. Like, when you get a lot of exposure in the industry, and when you have a lot of people following, and then they ask you, like, hey, can you do signals and stuff like that? You don't really do that in life either. Oh, what's going on over here? One moment here. Let's see now. Okay, a bunch of people didn't have any sound. No wonder my voice was cutting out. Okay, can you guys hear me? All right, perfect. Some people had no sound at all. Okay, awesome. Forex and life is relatable, right? Like, You need to be a complete savage in life. Like, there are some people who are extremely, extremely driven, who don't take no for an answer, like who just like take things as they are and they just go with it. That's the same thing you have to apply to Forex. There will be times where Forex is going to test you, like when you're going to be in a drawdown, but you have to trust your analysis. But when you trust your analysis, it comes a lot from what your plan is, right? And what you're looking for, or what basically you're aiming for at the end of the trade. Okay, sound is good. So, Forex in life, this was like a small extra topic that I wanted to include in the webinar, because I thought that it's very important, like the whole psychology of trading and stuff like that. Even though like I don't go into the psychology of trading a lot, but you learn psychology over time as you trade, as you face losses, as you face wins, as you like develop that discipline to actually manage your trades, or to actually like step away from the charts when you hit your goal, right? So this was Forex and Life section. So I'm drinking coffee at the same time. All right, trading plan. The most important fundamental aspect of trading. Trading plan is something which will bring you a lot of money. Very, very, very important. Trading plan, very important. I cannot stress this enough. Anyone who does not have a trading plan is someone who I will not mentor, is someone who I will not take seriously at all, right? So you need to have a fucking trading plan. Very, very important. What does it consist of? Consists of your goal for the day. Let's say you sit down, you want to trade, and then you realize, oh, I don't have a trading plan. So how do you make a trading plan? You make a goal for the day, right? So what should be your goal for the day? For some people, they say, okay, like, our goal for the day is 10 pips or 20 pips. But what I recommend for you to have a goal should be in percentage, right? This should be your goal in percentage. What this means is, like, personally, my goal is 5% a day. That's my goal. That's what I start off with, right? That's what I start off with, 5% a day. Now, if some guys are new and they just joined in, I highly recommend that you have a notepad or you take notes, because this is very, very important information. Because every day I get messages on the same thing, like it's like on a repetitive mode. So it's very important. Make notes. So if you don't have a trading plan, you should start with what's your goal for the day. I start with my goal for the day is strictly 5%. Okay, so now once you have your goal for the day, you want to build on to this goal. All right, so next, what you do is pair to trade, right? So you have your goal for the day, and then you pick one pair which you want to trade, right? That one pair is going to get you to your goal. Okay, so I have some questions here. Oh, they're all like wondering about. Okay, so I'm not going to answer questions right now. I'm going to answer questions like after each section. So that's how we're going to do it. Goal for the day, and then the pair to trade. Now, my pair to trade is USD/JPY. This is my pair to trade. And when I trade USD/JPY, I'm looking to reach my goal for the day with USD/JPY. Okay, this is my goal and this is my pair. Very, very important. You have two things now. Now you need to articulate, like, what would you do to reach your goal for the day trading USD/JPY. All right, so number of trades. Another very, very important aspect of trading and being successful, but at the same time not taking many losses too, very, very important. Number of trades is important because let's say you want to make 5% in one trade, right? If you're going to make 5% in one trade, this means you're going to be risking more to get 5%. Makes sense? But ideally, what I like to do is, personally, I like to take 3 to 4 trades. 3 to 4 trades a day. this is what I do: 3 to 4 trades a day, and each trade I aim for 2%. Okay, if I get 5%, perfect. Like, that's like a bonus. So, oh, someone's saying still can't hear me. One sec here. One moment here. Uno momento. Yeah, tell them to reconnect or turn the speakers. Okay, it's working. Okay, whatever. Let's just keep going. Okay, people on Zoom, can you guys hear me? Everything's good? Everything's Gucci? Yep, okay, perfect, awesome. So number of trades, 3 to 4 trades, I aim for 2% per trade, right? And now at this rate, 2% per trade, I'm not risking much, right? I'm not risking much. I'm risking maybe 1%, 0.5% to get 2%. And then 3 to 4 trades, I have a lot of opportunities in the day to take 3 to 4 trades, right? You can take a trade in Asian session. You can take another trade in London, or like I skip London, right? I don't trade London because it interferes with my sleeping pattern. So, and then you can trade New York, right? So 2 trades, 3 trades, aim for like 2%. You can easily get 5% a day. It's no big deal. And the way most people here trade, they're very, very, very aggressive. So they get 5% per trade, right? But it all comes with experience. It all comes with time. Let's go to the next point here. I want you to remember what the next point is. Oh, okay, win-loss percentage. Another very, very important aspect. This is so important that it will help you retain your profits. It will help you protect your capital. It will help you reduce your losses too. Okay? So my goal for this is, let's say if I'm taking 3 trades a day, right? I'm taking 3 trades a day. First trade I take is a winner. Okay. Second trade I take is a loss. And then if I take the third trade, if that's a loss, I stop for the day. My day is done, right? Because essentially, if you're going to take a third trade thinking that you want to make up for these 2 losses, this would mean that you'll be risking much more to make up for these losses, right? So if you're risking much more, your probability, even though your probability of winning is high, if you lose, you're going to lose even more, right? So you're going to be in more negative. So this is win-loss percentage. Now, if you lose your first trade and if you win your second trade, you can still take another trade, right? Because essentially, if you have a very, very strong trading plan, if your strategy is very, very profitable, your probability of having another winning trade is pretty high, right? So that's going to bring you into positive, right? So my rule of thumb is if I take 2 losses, I'm done. You should be done. Like, you should be done. Like, if you're one of those people who's a total rebel and who does not care at all, then what you can do is you can just like have you can walk away from the charts for an hour or 2 hours. What I normally do is, like, if I win a trade, I don't look at the charts for the next 2 hours or 1 hour, even though it's a very hypocritical statement, but still, like, it's a very, very good practice for your discipline, for your patience, that if you do win a trade, just step away from the charts for 1 or 2 hours. Very, very important, right? That will enable you not to like trade emotionally, or not to do any sort of impulse trading. Okay, so let's go to our next point. Times to trade. Another very, very important aspect of trading. Times to trade. Times to trade is so important. It's so important that it will save you a lot of issues, being in drawdowns or being stuck in consolidations or like, like if you have a family, like it will save you a lot of issues. Like when someone says, like if you have a girlfriend or boyfriend, whatever, they'll save you a lot of arguments like, oh, you don't give time and blah, blah. You're always trading. Very important, right? So I have a set timetable which I trade. What I trade is I trade Asian session, Asia, and then I trade New York, right? And I try to keep these like 3 to 4 solid trades, okay? Because now I know if I take one trade in Asia, then I'm done. Like, then I'm done. Like, then I don't have to trade all the way till New York, right? And when New York's session starts, there are times in the session when there's a lot of volatility, and you as a trader, you're looking to ride the volatility, like when charts are moving very, very fast, you're looking to ride those fast movements, those times when there are like a lot of volume. Because if you trade from let's say London close, I can't draw this over here. Let's say you do trade from like London close till New York close. That's a time when there's no volume in the market. I mean, there are no orders flowing. There's no one else trading. So the price is just moving up and down. So that's a very, very bad time to trade, which in our, which in our culture, we call it the saggy tits hour. Because when it's the saggy tits time, you shouldn't be trading at all, because your trades should be done when the New York's session starts at around 9:30 a.m. Eastern till 11 a.m. Eastern. Or if you're trading Asia, you should be like, your time should be between, I'd say, like 7 p.m. Eastern to like 9:30 p.m. Eastern. London, everyone knows London open till like the first 2-3 hours of London, right? So trading plan, very, very important trading plan. So what I'm going to do here now, I'm going to pull up an example of a trading plan. This trading plan belongs to one of my people, one of my members in my group. I use his trading plan as an example. It's so good. It's so good I use it as an example. Yeah. One sec here. It's just loading. Don't worry, it's going to be in the drive. Where is it? Okay, it's downloading, and it's downloaded. It's opening. Okay. This is a great example of a trading plan. Very, very good example of a trading plan. Like this, I absolutely love this trading plan. Oh, okay. All right. So why it's important? Because this person has goals written, like it has their short-term goals, midterm goals, and long-term goals. I mean, look at this. Like his long-term goal is to have 6 figures within 2 to 3 years, 7 figures after 3 years. So how are you going to get to 7 figures after 3 years? Is by having like short goals. Like let's say if you're aiming for 5% a day, or even like 3% a day, you can easily increase your account. Like it's unreal. It's unreal the way you can increase it. I'm gonna let me just show you this one thing over here. If you start off with $1,000, and I'd like to give you guys a copy of this. I'm gonna keep it here. All right. So this is an example of having a short-term goal, right? So look, you start with $1,000. Your daily growth should be, if let's say it's 5%, right? 5%, you're aiming for 5% every day. As your equity increases, you're increasing your lot sizes as well based on your equity increase, right? So 5% a day, start from day one. You go to day 60, 2 months, 2.5 months, discounting the weekends, you get to 17K, like almost 17K, right? So this is one of your like short-term goals. So, but obviously some days you're not going to hit 5%. Some days you're going to catch a big move and you might end up with 7% or 10%. Who knows? But I know for a fact that everybody who joins the Forex family or who joins my group, their first 2 trades, they are always profitable. They are always profitable. It's the trades which they take after that are the ones where they lose all their profits. I don't understand why. But this is the thing. Have a goal. Have a long-term goal, right? And know that, okay, by this day, this is where I have to be, or this is where I see myself, right? And then you're going to get there. Like, a lot of people want to make 6 figures the next day. It's just not going to happen, you know. It might happen, but then, you know, it's like there's no longevity. There's no longevity to it. All right, so trading plan. This guy has his pair to trade, his days to trade, times to avoid. Very, very important. Not trade till Sunday until get the hang of the market. Friday is going over charts, week, analyzing the charts for Monday. Right? He got his risk reward, 5%, 5 to 10% daily, 10 pip standard. Always use a stop loss, starting lots, positions. And then he has his strengths. Like, this is very important. You need to know what your strengths are, right? Motivated, dedicated, never give up and dream. You know, like, even if they lose a trade, that's okay. He's okay with it. Then there's weakness, confused with the EMAs. If you're confused with EMAs, don't use EMAs. Stick to support resistance. Getting greedy, time frames, indicators, journal, you know, a great example of a trading plan. It's going to be in the drive. I'm going to share it in Ted's drive too. So, yeah, that was the example of a trading plan and why a trading plan is very, very important. This coffee's good. Okay, and don't be a dickhead, you know. This is what I mean by, like, when you win a trade and then when you lose, don't take another trade and lose your profits. The same thing as don't be a dickhead, you know. You have to protect your capital. Okay, so any questions regarding a trading plan? Does a trading plan include setups you want to trade? Absolutely. Absolutely. It should include the setups. The setups, what I like to trade are buy support, sell resistance, and that's exactly what we're going to go over after this slide. Okay, seems like no questions. Pretty straightforward. So you didn't eat, just eating Nutella. All right, so time frames, very, very important. Actually, everything is very, very important. Time frames are important in a sense where you shouldn't be getting confused in a chart. That's how important time frames are. And it's also very, very important that what time frames include, right? So if you're looking at a daily time frame includes 4 4-hour candles. Everybody knows this, but not everyone is aware of this, right? These are very two different things. to know something and to be aware of something. Very, very important. And they're two different things. Now, when you have a daily time frame, a daily candle is going to finish after four-hour candles, right? So when you're looking at, like, let's say a daily candle, let's say, is bearish, right? If a daily candle is bearish and it's ending bearish, but you still have, oh yeah, someone says six 4-hour candles. My bad, 6 4-hour candles. So let's fix this here. 6 4-hour candles, because there are 24 hours in a day, obviously 24 hours, right? So 6 4-hour candles in one daily candle. So if someone trades like daily time frames, wait for the daily candles to close, because that one last 4-hour candle can change the entire daily candle. You know, it can make it into a doji, it can make it into from a bearish to a bullish candle or whatever, right? So it's another thing. Always wait for candles to close. How many days are in a week? 8? Do you look for structure before you? Okay, I'm not going to answer questions on. Okay, go forward. Let's continue. Now, 4-hour. One 4-hour candle has 4 1-hour candles. Okay, like if you are looking now, this is where things get interesting. There has been times where 4-hour candles have pushes before they close, right? So I know a lot of guys who trade and they don't really look at the times of the candles, right? They don't look at the times of the candles, and then they probably miss trades, or they are not able to judge trades, right? So let's say a 4-hour candle is closing. Now, from experience, I know that when 4-hour candle is closing, there's going to be a push at the very, very end. So I keep an eye on when the 1-hour candles are closing, right? Because I know if this is the last 1-hour candle of the 4-hour candle, it's going to push one way, or it might, like, you know, I'm trying to say, like, you're trying to gauge movements from your 1-hour candles, which make up your 4-hour candle. Does that make sense? Hope this makes sense. All right. Let's move forward. 1 hour. 1-hour candle has 2 30-minute candles, 4 15-minute candles, same concept as the 4-hour candles, right? Again, 30-minute candle has 2 15-minute candles, and then 15-minute candle has 3 5-minute candles, right? So this is very repetitive. Everyone knows this, but I've done a lot of one-on-ones with people, and they don't take into account when the candles are closing or when the candles are starting. They don't take that into account, and this is very important. If you are, let's say, at 10 a.m. Eastern, there is always a push, right? At 10 a.m. Eastern. So when the 9 a.m. candle is closing, I'm always looking at the 15-minute candles to see where they are closing, right? It's very important because you need to be aware of when the smaller time frame candles are closing, because these smaller time frame candles will make up your bigger time frame candles, right? So 4 15-minute candles are going to create one 1-hour candle, which is why it's very, very important to let the 1-hour candles close all the time. I'll even highlight this. Let 1-hour candles close. If there's half an hour left for the 1-hour candle, let it close. If it's 15 minutes left for the 1-hour candle, let it close. Because from what I've seen, you can take one trade out of one 1-hour candle. So you need to let the 1-hour candle close. Very important. This goes back to your psychology too. Like, you need to be patient for candles to close to see what the charts are going to tell you. Okay, so let's see if there are any questions on time frames. Yeah, exactly. So there's going to be, someone asked me, so more like there's going to be a push in the last 1 hour of the 4-hour candle. Yeah, exactly. There's going to be a push, but you need to be aware, like, you need to see this happen over time for you to like actually gauge. Ruben and Yusheng, you guys good?
Hello, yes. Everything's good.
Okay. All right, perfect. So let's see here. All right. Let's move forward. Okay. So this is like the crux of my trading. What's going on over here? All right. So, okay. Support and resistance. Very important. Now, support is a zone or a range of prices or an area, right? Very important, these three words there. These three words, very important. It's a zone, which is also the same thing as range of prices, right? When you have multiple prices in an area, it's a zone, right? Or it's an area in a chart from where the price is more likely to turn bullish. Simple enough, right? If you have your support zone here and price is coming down, and let's say this is the higher time frame, so it's more likely to turn bullish, right? There's a high probability chance. What I say is that if you're looking at daily or the 4 hour, there's an 80% chance that the price is going to reverse from a support area, right? The same thing. One moment, please. Okay, we're not talking about gold here, then blah, 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 blah. Okay, and then all the questions you guys are asking me, like all these questions are going to be answered later on. So just stay patient. All right, so resistance. Resistance is the same thing as the zone range of prices in an area of chart where the prices are more likely to turn bearish, right? So it's the same thing. If you have your resistance, let's say you have your resistance, and this is a higher time frame, by the way. This is like your 4 hour, right? This is not 15-minute. This is not like 30-minute or like 1 hour. None of that. It's your 4 hour time frame, because I always look at 4 hour time frames, and price reverses from these areas. So if you have a 4 hour time frame and you have this resistance, there's again the 80% chance that the price is going to reverse. 80% chance. And this is what I do all day. Like, it's the same thing. If you go to the casino and you go to the casino, they tell you, hey, Mr. Client, today, if you come and play at our casino, you have an 80% chance of winning the lottery. You know, so why wouldn't you go and go play and win the lottery, right? You have an 80% chance, right? So it's the same thing. If you're looking at the 4 hour time frame and you're seeing price going to like support or resistance, there's an 80% chance that it will reverse and you will probably win your trade. But it's not that simple, right? There are a lot of variables at play which you need to be aware of. There's a lot of stuff which goes into it. So we're going to go over that in the next slides. Okay, remove this. I think, how's my pace, guys? Like, is my pace okay? Am I too fast or too slow, or? Okay, it's good. Too slow? Okay. Yeah, I'm too slow because there are some people here, like we just started, some people who actually wanted to do this, so, you know, it's good. All right. Let's continue on. Okay. All right. So the higher time frame, the stronger the support zone. Very important. I know a lot of people who message me saying that, oh, hey, I bought at resistance and it broke resistance. And then when I tell them to send me a chart, they send me a chart of 15-minute. And of course, that's not going to work, right? 15-minute is a 50-50 chance. I mean, it's gonna break resistance. How can I see the chart of the webinar? You can't. Only I can. From Raja Banks. All right. So then you have the daily, 4-hour, and 1-hour time frames. Okay, they have a very high probability for a bounce or rejection. Very, very important. I know a guy actually. He used to work in the oil fields, and I called him once, and he was actually interested in Forex. So this happened on a phone call. This is actually a true story, by the way. All what I told him was to open a chart, draw 2 lines on the 4-hour time frame, right? And guess what those lines were? Those lines were your support and your resistance. This is what I said. If price goes to resistance, you sell. If price goes to support, you buy. 4-hour. That's all he does. That's all he does, and he's like raking money like there's no tomorrow. Like it's. I don't even want to go into more details of the guy because like he likes to keep it very, very private, but it works, right? 4-hour daily, these zones, these support resistance zones, guys, they're very, very strong zones. And price is known to reverse from these zones 80% of the time. So why wouldn't you want to take advantage of that? The only thing is that you have to wait for price to come to your area. That's the only thing. You have to wait. And let's say in a day, you're your plan is to take sells or buys from 4-hour support resistance. In a day, you're basically taking 3 trades, right? You're waiting for price to come to your area, and you're taking 3 or 4 trades. That's it, 3 or 4 trades, and that fulfills your trading plan, right? I mean, it's just that simple. Now, 15-minute support resistance are weak areas, so generally they're not taken into consideration. Yeah, same thing. 15-minute, week, 4-hour and daily. I typically look at 4-hour and daily support resistance because they are very, very, very strong. 1-hour, they might break sometimes, but 4-hour and daily, very, very, very strong. Okay, any confusion? Any confusion in the slide? Any questions? Up till now, no? Okay, perfect. Perfect. Nothing yet. Good. Candlesticks. Now, what candlesticks are? Candlesticks have wicks, your wicks, right? These are your wicks on candlesticks. Okay, these are called your wicks. These wicks are ranges, okay? These wicks are like, let's say this candle opened from the top and then it closed at the bottom, right? So, okay, so we're talking about this candle here. It opened here and it closed over here because this is a bearish candle. So it closes high and it opens high and it closes low and it has this wick. This wick means this is a range. This is the range where price went and it reversed, right? So this is a bearish, so price will probably go down from here. But like if you're looking at the daily, if you're looking at the bullish candle, you have this wick, right? You have this wick. So this is a range where price went, but it came down. So when the next candle forms, it's more likely to go up and fill this range right over here because price has gone here previously, so price will probably going to go here again, right? So this is what we mean by wicks and ranges. We're going to go over this in more detail here soon. But these are candles, simple concept. People know about this, but they're not aware. Very, very, very important concept of candles. Move on to range and depth. This is the thing I was talking about. So you have a bearish candle, right? You have a bearish candle, and let's say this bearish candle is at support. Okay, so now this also applies to your bullish candles as well, right? So just in your mind, just like reverse it to bullish candle. So you have support and you have this wick, right? You have this wick. So let's say this wick is 5 pips, okay? This wick is 5 pips at support. So what this means that this is your zone and this zone is 5 pips, right? So when the next candle forms, and let's say this is a 4-hour support, when the next candle forms, you know that the next candle, it can wick down deep into this zone. And then you can have your stop loss beyond this zone, right? If this is your 4-hour support, even if this is your 1 hour, right? Because like 1 hour support still is very strong. It can still reverse and go up, right? So, or like go down if you're looking at a bullish candle at resistance, right? So this is like your depth of the zone. So this wick, it just says that my range or depth is 5 pips, right? So my zone is 5 pips deep. This is my zone. Even like up till here, like let's say there's resistance here, and maybe there are some candles who have made wicks here. So this is your resistance zone. So your resistance zone is whatever pips you say it is, right? So whatever pips like you've measured. And then the area, if you guys have your notepads, just write this down, okay? Very, very important. Your wicks is the range or the depth of the zone. And the area between your support and resistance, this entire area, this is called range. Okay? This is called range. Very important. Now, let's say this range is 25 pips. Okay, let's say this range is 25 pips. And you know, if you want that, all you're doing is counting on the probability that the price is going to reject support. If price is going to reject support and your plan is to get 10 pips, where would you want to enter to guarantee 10 pips? Would you enter over here? Or would you enter over here? Or maybe somewhere over here, right? So let's say this is A, this is B, and this is C, right? Typically, you would want, yeah, exactly, right? You would typically want to enter at C, or even if you can also enter if in this zone here. Let me just change this color. You can even enter in this zone, like when price comes down here, you can enter, because if you enter here and then you can keep your stop loss beyond the zone, which is probably going to be a small stop loss, but then at the same time you're guaranteeing yourself at least 10 pips because your range is 25 pips, right? Now, in the other instance, let's say you want to enter in the middle of the zone, of the range here, over here, right? So if you're entering at the middle of the range, now your range over here is 12 pips, and your range over here is 12 pips, right? Now you are in a dilemma. Now from here, price can either go up or it can go down, right? You have a 50-50 chance. You have a 50-50 chance the price is either like move up or it's going to move down. And this is just not going to be a good trade because now your probability has decreased significantly. Exactly right. Like it's a fucked zone. Like you're basically fucked. Like if price goes there and you're like, okay, price is moving up, I'll take a buy. What if price comes back down? Then what? Where will your stop loss be? Would your stop loss be over here? This is a big ass stop loss, man. You can't have a stop loss here because you took a shit entry. So what you can do, you can wait for price to either come down to your support zone or go up to your resistance zone. That's the thing. You can just wait. Okay, so someone asked a question. When we enter in that zone, how do we know when price will break it or not? Okay, this is the question I get a lot. I get a lot of this question. Okay, so there's a very, very simple answer to this question. How would you know if price is going to respect your support or resistance zone? Very simple. Very, very simple. Let me just remove all this, and then I'm going to answer this question over here. So again, I said, let's say this is your support zone over here, and you have a stop loss over here. If price comes down and breaks this zone, you have a stop loss, right? It's going to take out your stop loss, and then your trade is done. Then you wait for another trade. That's the answer to how would you know if price is going to respect this zone. If this is a higher time frame support, let's say a 4-hour or daily, there's an 80% chance that it will bounce, right? So like it's a thing, it's like what I said in the beginning, Forex in life. Everything you do is on chances, right? You drive a car, you're taking a chance of getting into an accident. How do you know you won't get into an accident? Right? How do you know that? Do you trust all the other motherfuckers driving on the road? No, right? You trust yourself and you just take that chance. It's the same thing here. You're taking a chance. You're taking a chance of a reversal on the higher time frames, 4-hour or daily. So it's just that simple. I see someone saying here on the first touch, and then they might thinking on the second or third touch. I will never mention second touches, first touches, third touches. I will never mention that because my plan is to take a bounce off of support or take a bounce off of resistance, get my 10 pips, and wait for the next trade. That's it. If the zone breaks, you have a stop loss, okay? Your stop loss is going to take you out because there's a 20% chance that the zone is going to break. And you're taking that chance. Life is like that. You play poker, you're taking chances, right? You go to your job, you're taking a chance. Everything you do, you're taking chances. And Forex is no difference at all. You're taking chances, but you are calculating your probabilities, right? You're only taking the trade which is highly probable. Yeah, so these are higher time frame candles, as I said 10 times, 4-hour. Okay, any questions? Okay, so I have a very interesting question here. I don't know if you were like attentive in the beginning or what, but okay, so the question is, would you say that if you get stopped out with my stop loss, should I now take my trade in the opposite direction for the second trade? When we first started, I said you need to be disciplined, right? I told you, like, when I lose a trade, when I lose a trade, I step away from the charts for 1 or 2 hours, I don't look at the charts. I step away from the charts for 1 or 2 hours because I'm taking two or three. Exactly, Sergio. All right, all right. All right, perfect. No worries. Okay, Ruben, Yusheng, Ahmed, you guys good? Any questions up till now? I know Ahmed, like you joined later on, but this is recorded, so it's going to be in the drive, so you can view it later. Okay, no questions, so I guess everything's Gucci. Okay, all the new questions coming in, we're going to go all over that here in a bit. I'm sorry, my bad. All right, so let me just clear all these drawings. All right, off to the next one. Okay, now this is where things get really, really fun. This is what I love. Now, wicks. When wicks are made in a candle at daily or 4-hour support resistance, if anyone talks about 15-minute or 5 minute or 30 minute, I'm going to remove you from the webinar. Okay, because I'm talking about 4-hour and daily. Okay, I'm being very, very specific. If there's if there's going to be something, if I talk about trend lines or if I talk about third or like any touches, I'm going to mention. Okay, if I don't mention anything, that means I don't look at that when I'm trading. Simple as that, right? So wicks at daily or 4-hour support resistance. This denotes the range of the zone, right? So I have this chart over here. Let's have some fun with this chart. I have this chart. So this is your support. Now, your support, I've measured this support zone. This is the 4-hour chart, and you see this wick, okay? And then you see this wick, right? So let's say your trade is somewhere over here at support, right? And you see this wick. Now, you know that you have this wick, so your zone is almost 10 pips, right? Your zone is almost 10 pips, and you see this support. So if you're waiting to take a buy, you would wait to take a buy like somewhere over here or somewhere over here, having a stop loss around here. If you have your stop loss here, this is probably 5 pips. Make sense? So this is your 5 pips, sometimes for 10 pips. Okay, yeah. So this is your stop loss here, 5 pips, because what you're doing is you're essentially taking a buy off of the higher time frame support, like the 4-hour, right? So this is your buy right over here. Now, even if you look around here, if this is what your resistance zone, if you look left, right? Look over here or look over here. This was your resistance zone. So now we're talking about this support. You took a buy, price went up, you got your 10 pips, 15 pips, or whatever you want to get, and then price came back down again in this zone. Now, price came into the zone, you can take another buy, knowing that in the past, we have rejected this area. So there's an 80% chance, because I'm looking at the 4-hour time frame, there's an 80% chance that the price will reject it again. So you take that chance, right? You take that chance, have a stop loss, and off you go. Yeah, so off you go. So this is buying off of support, and this is what wicks basically mean. Like when you see wicks at a support or resistance, it's basically a range of the zone. It's not the range. It's basically the what was that word? Range, the depth. Yeah, it's like the depth of the zone. And then at the same time, if you have this is support, and then you have let's say you are aiming for resistance right over here. Okay, so this is your range. This range is probably 30 pips. Right? This is your range. So in this range, you want to take 10 pips, right? 10 pips, 15 pips, whatever. Because you see right here, price came here, it reversed, right? And then in this section here, price wicked up, right? Price wicked up, and it made like a zone. So you must have gotten stopped out, but then price went down, and then you're waiting. This is why I say that when you lose a trade over here, thinking that it's going to return because of this wick, like resistance, and you get stopped out, step away from the charts for like 1 or 2 hours, and then you'll notice, oh, price came down here at my support area, so now I can take a buy, and you take a buy, right? So let's see here. So you don't wait for any confirms. No, I don't wait for confirms. If you see support resistance forming, you look left. Yeah, that's what I said. You just look left. You look left. Like let's say, okay, let's move on to the next slide. I have more examples here in the slide because I'm a nice guy, you know, so I have a lot of examples. Okay, so let's go. All right, yeah, this is another example here. let's say we are looking at, okay, this is basically not the, okay, so I have a question. Positions you take when price reaches your zones, are they limit orders you've set beforehand? No, they're market orders. Like I'm actively watching the charts, right? I'm actually watching the charts, and that's when I take my positions because I want to be very, very specific, right? So this is another 4-hour chart. This is another 4-hour chart, and let's say we enter, like we open the chart when candle is over here, or actually, like, you know, when the candle is over here. And now when candle is over here, all you're doing is you're looking left, right? You're looking left and you see this area, right? You see this area. Don't worry about this line. This line was when I was trying to measure the zone, right? So you have this area. So when you're looking left, you have these wicks. So remember when I said these wicks are the depth of the zone? They tell you how deep the zone is. So this wick here, this is the extended part of the zone. Like if price goes up, it will probably go up till here, right? But what you're doing is like you're looking to take a small stop loss, like you're looking to have a smaller stop loss. So what you're doing is you're averaging out the lengths of the wick. So if you look left, you look at this wick over here, you look at this wick here. Now, what I'm telling you right here is what goes through my mind when I'm looking at the chart, okay? This is exactly what goes through my mind. So just, yeah, it just goes into my mind. So I'm looking at this wick, I'm looking at this wick, and then I'm looking at this wick here, this wick here. So this tells me that on average, the wicks have came up till like this zone, right? This area. This is the average length of the wicks. So now I'm taking a chance because now once we've reached resistance on the 4-hour, right, all I'm doing is now I'm just waiting. Now I'm just waiting for price to come into my area over here, right? So when price comes up to here, I take a sell, right? I take a sell and I keep my stop loss here. Because if my depth of the zone is 10 pips, and if I take a sell here, my stop loss is probably 7 pips over here, 7 pips or 5 pips or whatever it should be like at that moment, right? So this is what you're doing. Like you're taking a sell and you're taking a chance actually, having a stop loss, and then, you know, what happens? It gets rejected, right? It gets rejected, and when it comes back up again, you see this, it comes into your zone. So whenever price comes into your zone, you take another sell. You take another sell, it taps it and just drops, right? This is probably like a 15 pip drop because you're looking at your 4-hour resistance zone, like your rejection area, right? So this is what you're looking for. Okay, any questions regarding this slide? The average length of wicks, because that's how I like averagely I measure my wicks when price reaches a 4-hour resistance or support. All right, let's go here. Okay, so people who are looking for current terms, okay, makes sense. Taking the average wick because yeah. So see, I'm answering all your questions. Where would you take your profits then? Okay. Where would you take your profits? Lorenzo, I'm going to kick you. But just joking. It all depends on your plan, you know, like if you, I say it all the time, my profits are always 10 pips, 15 pips. Could you take the next candle after the initial drop? I don't know. It depends. 4 hours later, yeah, depends. But now this is another thing. There's a question of, can you take the candle on after the drop? Do you only enter 4 hours? Yeah. So I enter on the 4-hour, and then I look at the smaller time frames to actually like tone my entry. But overall, I'm looking at the 4-hour. So I have a question that can we take a sell after the first 4-hour rejection candle? What that means is, can they take a sell over here? Right now, the way I've been trading, I've only been trading selling high and buying low, because the great Warren Buffett says you sell high and you buy low, right? What this means is that you are selling high from an area which is a very, very strong area. Okay, so that is the highest point where you can sell, and it has to be a strong one. So what are the strongest areas where you can sell? The 4-hour and the daily and the weekly, right? If you're like a big swing trader. And what are the strong areas where you can buy? The 4-hour and the daily. Okay. All I did was listen to Warren Buffett. Sell high, buy low. All right. So yeah. So like if you take a trade here, you don't know if price is going to go back up and retest it. Okay. Or it's going to continue moving down. Because if it goes up and you're holding a drawdown, you're essentially holding a 20, 25 pip drawdown. You're fucked. You know, like, I don't know if you're like, it just doesn't make no sense. Trading within a range, it makes no sense to me at all. You know, unless you are very, very experienced and you know how wicks, ranges, and momentum works. But that all comes with experience. So, any questions up till now regarding these slides here? I hope my pace is okay, that I'm not too fast, because I'm like eating bare Nutella over here. Mm-hmm. Yeah, so I'm going to go over exhaustion wicks. I'm not going to go over liquidity wicks because I don't look at liquidity wicks. All right, so it's very simple. You don't trade session, just 4 hours. Yeah. Filling wicks, no, I'm only gonna, there's no simulation. This presentation is basically a manual towards the simulation we did last week. Yeah, I'm not going to go over liquidity wicks. I'm only going to go over exhaustion wicks because those are very, very important in the way like price behaves when it goes towards higher time frame supply demand zones or support resistance zones. It's the same thing. All right, my Zoom gang. You guys good? You guys okay? All right, everything's good. Everything's Gucci. Let's move on. Exhaustion wicks at support and resistance. All right. So these wicks represent the exhaustion of the momentum, right? Exhaustion of the momentum. Typically, you will notice a lot of wicks in a support or resistance zone, or maybe only one or two candles have left a wick, which will confirm that the price is rejecting the zone. A very good example of this could be, let's say if you're driving a car and you're running out of gas. So when you're running out of gas, slowly the car starts to jerk, right? So when the car starts to jerk, you know, okay, the car is exhausting, right? Like it's exhausting the fuel and now it's going to stop. Especially if you're going uphill. If you're going uphill and you run out of fuel, what's going to happen? Your movement towards the uphill, your momentum, is exhausting. So when your momentum is exhausting in your car because you're running out of gas, it's going to go all the way down, right? Because you don't have no gas. So price works the same way here with candles. When you are moving up, let's move up, right? And candles are moving up and they're leaving like wicks. leaving wicks. You see, oh, we're exhausting over here, and boom, we go down, right? 4 hour. So this is what exhaustion candles are. We're going to go over like chart examples as well here in a bit. Okay, so if 4 hour zone and price is in the zone, 4 hour zone and price is in the daily zone, you will still wait for 15-minute candle to close for entry. Yeah, I will always wait for 1 hour candles to close. If, let's say, price comes into my zone and the candle hasn't closed yet, I will still take a sell because it's in my zone. You know, like it's in that my higher time frame 4 hour daily zone, and I can have like a 5 pip stop loss. I'll still take a sell because then the candle might be leaving a wick, right? So we're going to go over that too. Okay, so let's continue here. Exhaustion wicks. We're going to go over exhaustion wicks right now. All right, exhaustion wicks. So we have, this is literally a 4 hour chart, okay, from April. This is a 4 hour chart on USDJPY. This is the 4 hour chart. Okay. You have your resistance, and then you have your support. What do you see here? Okay. Now, when price is moving up, you always got to look left, okay? You look left. These are your exhaustion wicks, okay? When you have wicks in a resistance zone, someone's asking me, so when you wait for the candles to close, so when do you wait for the candles to close? I wait for the candles to close. Well, it depends on what's happening, you know? It depends on what's happening. Like it's all subjective, so it depends on what's happening. Someone said, punch them in the fucking face. Okay. All right. So these are your exhaustion wicks, right? So when you have a lot of wicks in a zone, this means that the price has exhausted here in the past. So when price is coming back here up again, you're looking left. You're looking left. So this is the information you have on the left. Now, you're looking at this wick. You're looking at this wick, this wick, this wick. So the average length of the wicks is up till here. Okay. The average length of the wicks is up till here. And now you're just waiting for price to come into the zone. When it comes into the zone, you try to take a sell. Over here, the next candle forms, it comes up to here, you take a sell, you have your stop loss above your zone, right? Because you're looking left and you have this information that price exhausted here in the past. So what's the chance that the price is going to exhaust over here again? There's an 80% chance that the price is going to exhaust there again because it has exhausted here in the past. That's all I see. That's all I think about, to be honest. That's it, right? If it exhausted, it's going to fall down, right? Because this is your 4 hour resistance. Now, in the same way, if you miss this sell, okay, if you miss this sell, you don't have to force, you know, because if you're looking at your support, you're looking at this wick, you're looking at this wick, and then you're looking at this wick, right? So, you know, like your support depth, the depth of your support, this is the depth of your support. So when price comes down to here, all you're doing is waiting for price to come down to your support so that you can take a buy. You know, you can take a buy and have your stop loss right over here. Because if you look left, you have this information that price has exhausted here in the past, right? These are exhaustion wicks. Price has exhausted in this zone. So what's the chance that the price is going to exhaust in this area again? there's an 80% chance the price is going to exhaust, right? And you're basically just taking chances. Now, if you were to, let's say, if price is moving up and you take a sell right over here, thinking, okay, we're going to go up over here, zone to zone, or yeah, it's a good trade. No, it's in the middle of a fucking zone. It's in the middle of a range, right? So this is your range. It's in the middle of the range. Yeah, exactly. So if, let's say, price is bouncing here and you take a buy over here, it's cancerous, because now when this candle goes down, you're thinking, oh, we're going down, and then you close your buys over here. And when the next candle forms, it starts to go up. And then you beat yourself in the head that, why did I close? Because you're being a dickhead and you took a buy in the middle of this range, okay? This is your range. The area between your resistance and support is called a range. Okay, if you're taking notes, perfect. I'll give you a golden star. This is called a range, and you have to measure this range. Let's say this range is 40 pips, because you got 1, 2, 3, 4, it could be like 40 pips, right? If it's a 40 pip range and you're aiming for 10, 15 pips, what's the highest probability if you can enter a trade, you are guaranteed 10, 15 pips? If you sell resistance or if you buy support. The hardest thing is to just wait. You just have to wait for it to happen. If you take a buy over here, or if you take a buy over here, you're in the middle of this range. In the middle of this range, you have a 50-50 chance that the price will either go up or it's going to go down. It's a 50-50 chance. It's a bad trade. It's like you give a car to a handicapped person or someone with Down syndrome. Hey, go drive. 50-50 chance he's going to come back safe. So don't be mentally retarded taking trades in the middle of ranges. Wait for price to come to like these rejection areas, this support, this resistance, and this support. You have to wait 4 hour only. 4 hour, and daily works best. The best. It works the best. I promise you. I've done it so many times. Okay. Any questions? Okay, I'm just going to go over this question feed over here. Okay, so does price action mean the direction of the price is moving? I hear people say trade. Okay. Would you consider those resistance exhaustion wicks invalid when there's a candle with the bullish pole closing in the range? Look, if I will talk about trading in the range, I will talk about trading in the range. Because I will not talk about trading in the range, because if you're trading in the range, your probability to have a successful trade is very, very low. It doesn't make any sense, because I don't know, man. I don't know, you have to take trades where you know that you will win this trade. Like, your probability of winning a trade is going to be greater than the probability of you losing the trade, right? So that's why you look at these areas. This only works on 4 hour trade, or you can apply to 1 hour target. Yeah, like 1 hour, it's still kind of iffy. I always look at the 4 hour. It always works well on the 4 hour. Okay, Ted takes trades in the middle of the range, doesn't he? David, Ted has a lot of experience than you and me, right? So Ted can do whatever the fuck he wants. Don't try to copy people. But I'm just showing how when we first started trading. I'll give you a little background. Like, when we first started trading, when I actually joined Ted's very first webinar in June 2016. All we did was we would just wait for 4 hour candles. That's all we did. We would wait for 4 hour candles to go to either resistance or support. That's all we did, man. And when candles would go to support resistance, we would buy or sell. That's all we did. And we did that for a couple of months, actually. We did that for a couple of months, and then slowly, when we like mastered it, like when we mastered selling 4-hour resistance and buying 4-hour support, we started to look at things within the range. Like we start to look at things which we can take advantage of. Like if we can look at smaller time frames within the range, like over here or over here, we start to dissect that because we had already mastered these areas over here. Like, so then we started working on something more challenging. So there was a phase, like there was a gradual process, and you have to do that process, because if you're trading within this range, this means you're taking more than 4 or 5 trades a day, man. And that's cancerous, that's worse than AIDS. Like, you're gonna blow all your money. I've lost almost $80,000 in 7 months. It wasn't pretty at all, because I was just taking trades over here, taking trades over here. It was just stupid, Like, and then when you leave your job and then you focus, and then you put your all into trading, and your emotions get in the way, and then it's just like a downhill roller coaster. It's bad. So yeah, just trust this process. All right, this is the 4-hour. Okay, then some guy, you didn't answer my question. What's your definition of price action? This whole webinar is on price action on the 4-hour time frame. So now let's say these wicks, same thing. They're the depth of the range, depth of your zone, right? So you draw your zone, and then you just wait for price to come into the zone. That's all you do. When price comes into the zone, you take a sell based on the historical information you have over here, right? And you just take a sell. You take a sell and it falls, right? So now this is the trade I've taken a lot, right? So you see this wick. When this wick came down, it got rejected. When it got rejected, you know for a fact that, okay, there must be a zone right over here which this wick rejected, right? So when you know that this wick rejected this range of prices, let's say there's a range of prices here. This is usual, right? So probably this is 112 or 112 point, probably 111.999 or whatever, right? So this is like it's like, let's say there are like range of prices here, right? Which this candle rejected. So when price comes down here, it will reject it again because it has rejected this in the past. So when price comes down here, what's the probability it will reverse? What's the probability? It's a pretty high probability because this was done here before and this will be done here again. I've taken this trade so many times. It's on my Instagram. It's that 80% probability that it's going to reverse, and you just take that chance. Like, there is, like, you can say, what if the price breaks support? Well, too bad. That's why you have your stop loss. Like, price breaks support, no big deal. You have your stop loss. If you are full margin, let's say if you are over leveraged, then you are a dickhead, because if you're full leverage, it takes out your stop loss, and then you come to me or you go to Ted or whatever, you say, hey, I lost 20% because Raja said that 4-hour support buy, but it took out my stop loss and now I'm down 20%. Well, then you over leverage. It's your fault. Like, if you risked 20% with a 5-pip stop loss, how much were you like planning to make? Fucking 50%? Or like, what? No, man, it makes no sense. So it all goes back to your trading plan, right? Your trading plan, what's your goal? And how many trades you're willing to take. And I mean, if you have these high probability trades, 80% trades, you can take like 3 trades a day, 3-4 trades a day. Just wait for price to come off here. Can you get a 5-pip stop off of 4-hour on USD JPY? Yeah, you can. Okay, so remove this. Okay, any questions up till now? Okay, someone wrote, so on the far left, when there are several exhaustion wicks, if you sold on the first candle, then you'd essentially be in that trade for 18 hours, assuming the second candle's wick didn't go to 10 pips to your profit. No, it's all subjective, right? It's all subjective. Like you're basically, let's say if this candle, now we're just going into a lot of complications here. Now, let's say if this candle closed over here and it's a big bullish candle, you're essentially just taking a sell because you're at this resistance area on the 4-hour. So you're trusting this candle to go down because it's at the resistance, even though this is a big bull candle, right? Same thing here. This is a big, this is a bearish momentum candle. And then on the left, the only information you have is this rejection wick, right? So you're taking this information and you're putting it over here and you're taking a buy. So someone said that you're in a trade for 18 hours. Now, being in trade for 18 hours, this is what I'm saying. You are only looking at trades when there's volume in the market, right? When markets are open. So when markets are open, you're not stuck in a trade for 18 hours. Isn't it likely that you will have much less than 3-4 trades a day? No, if you're only trading 4-hour candles, you will be having 3 trades a day or maybe 2 trades a day, 100%. Okay, people are asking just unnecessary questions. Support along with candle body. Okay, if you're measuring candles and their wicks, go ahead. I never measure the candle and the wicks. How long do you usually? Okay, how long are you usually in a trade for? I focus on my 10 pips. If you go through my page on Instagram, they're all 10 pips, average 10 pips. If you said, if I'm in a trade for 15 minutes to 1 hour, I don't know, man. Like you need to go, this will be in Ted's drive. Watch it again. Watch the part where I mentioned about the trading plan and make your trading plan. And that trading plan section is going to answer your question. Okay. Ahmed, Ruben, and Yushin Gang. You guys good? Any questions? Man, this Nutella is blessed. Okay, perfect. Yeah, man, this Nutella is amazing. All right, let's continue. News. Don't trade the news. It's this is a news strategy. You can, like Shafiq Amiri, he wrote a document on the news strategy, and that document was don't trade the news. You don't have to trade the news. Trading the news is like trying to finger a line. You don't do that. Especially if you're a new trader. You don't have to trade the news. Okay, so I think next slide is on questions. Now we're open for questions. And by the way, I have a very, very good webinar. I think last week we did the this simulation. I'm going to link this webinar to that simulation. Okay, so yeah, simulation with Ted. Okay, you eating Nutella with a spoon? No, with bread. You're eating Nutella with bread. What differences can you mention about trading GJ, UJ, or gold, for example, using just difference in volatility, difference in the movements, but if you're a new trader, start with USD JPY. Very, very good pair to start with. If this webinar was recorded, will it be posted in the Facebook Forex family? Yeah, it's going to be in the drive. When a zone depth is too big on the 4-hour time frame, depends on what's happening in the chart. Why is UJ such a good pair to trade for beginners? Because it's slow. Yeah, it's slow. That's why it's good for beginners. Because it's a slow pair to trade. And it's awesome. Okay, so let's see here. I trade everything now because I trade everything with the same method because, like, essentially, like, if you are it's so simple, man. Like, look, this is the 4-hour time frame. 4-hour time frame, and look right here. Look at this area. Look at this area. Look at this area. Even if it went up, it stayed within this zone and came down. And then look at this area and look at this area. It broke your resistance and it continued to go up. But that's okay. It continued to go up. And when it came here, you look left. Like, you know, you look left. You see this, and then you look left, and then you see this wick, and then you see this wick, right? So this is a zone. Rejection, rejection, possibly a rejection. It got rejected. Like, you know, and then same thing here. Same thing here. Look at this. Look at when this 4-hour candle closed, and you look left. Look at this area, and look over here. You see, it rejected it. It went up. You know, and then look at this area here. You had this rejection here. When price came up here, it got rejected. And then again. Where is it? Yeah, right over here. Let's zoom in here. I think we did this. Price was rejected here. This is the 4-hour, right? So you really have to zoom in. 4-hour, price came down, rejected, went up, rejected here, came down, saw this. Oh, we were rejected here in the past. Okay, let's reject it again, and went up. And then you had resistance, your probability, it got, like, you know, and like it got. Probability was like failed, so your stop loss got hit, whatever. Like, you know, but we're in a bullish run. So yeah, this is like in the ranging, like even like look right here. Price reversed, candles, you know, whatever did their thing, came up, came into this zone, like this area, and reversed. Reversed over here, broke support, and then it made. Now, this is the thing. When you had support over here, let's say you had support here, right? And it broke support. It broke support, so now you're just waiting for it to create support. So it created support here, right? So when price moved up, you know, okay, we have support right over here, right? So, like, look at this wick here. Zoom in. Look at this wick. Price came down, rejected it, came down, and then you're like, okay, it rejected it here. It's probably going to reject it again, so you take a buy. And then price came back down here. You're looking at this information. They're like, okay, it rejected it on the 4-hour. You take another buy. Went up. And then this is another zone here. Then it came up, rejected. Even though if you can draw like 4-hour, it's amazing. Look at this. 4-hour, see here, it rejected this area. So it's probably going to reject this area here too. Rejected it. Came up, you see this zone here, rejected it again. And then up, and then down. So But this takes practice, like, you know, it takes practice. So, yeah. Yeah, you can use buy stops, sell stops, like, you know, it can work, but sometimes, you know, like you saw, I never use buy stops and sell stops because it's not a part of my plan. But yeah, this is what I do all day. Sort of all day, like support resistance on 4 hour and daily, and you just wait for price to go there, and then, like, you know, we just go aggressive on the markets. No, I'm not getting sleeping. I'm looking at my Nutella. Oh, last question. How do you weed out the good wicks from the bad ones? I don't know. Practice. Chart time. You need to look at the chart for like you just need to be chart smart, right? Like if you're looking at one chart every day, then you start to realize then like you essentially you build that intuition that you just know when it's going to happen. All right. So I guess this is it, guys. This was a surprise webinar. This is actually for some new people who joined my group, so it was for them, essentially. So I decided to share it with everyone else because I thought this would give a lot of insight on the way we do things. Okay, I guess everything is good. Guys in Zoom, you guys have any questions? No, it's not going to be on YouTube. What the fuck? Oh. So what, guys in Zoom, so what I'm going to do for you guys is I'm going to send you guys the link to the simulation webinar we did last week, and that is very, very relatable to this presentation we did right now. It's going to clear up a lot of things. Okay, perfect. So I guess we're all good. Have a good night, guys. If anyone's going out, drinking, whatever, be safe. Don't drink and drive. I know I did last night, but whatever. All right. Okay, take care, everybody.